Let's move on right now. Every Tuesday and Thursday, we are joined by Tim Ord of the Ord Oracle. You can go over to his website, check out what he's all about at ord-oracle.com. Additionally, you can look at all of our archived interviews right on our YouTube channel at Tiger Financial News Network. If you decide to do that, please consider giving the video a thumbs up. Please consider subscribing. It helps us out immensely, and I would absolutely recommend checking out ord-oracle.com. Tim, how are you doing?
Good. So, week's ending here, a couple more days. So, actually, market's kind of sticking in there.
Yeah.
Let's go take a look at it.
Absolutely.
So chart one, this is updated today. Just kind of a reminder where we are. But the bottom window is it's called the Zwag Breast Thrust Indicator. I presented this quite a few times over the last couple of weeks, but it's just more of a reminder where we are. But anyhow, the bottom window, I'll describe it again, is the NYSE advancing issues over total issues with the 10-day average. And to trigger the Zwag Breast Thrust Indicator, it needs to get below 0.4, then rally to 0.6 in 10 days or less. Well, we did get down to 0.41, but we did rally to 0.61 in 6 days. So, my opinion, that's close enough. I've labeled the other Zwag Breast Thrust indicators going back to 2022. If you look at the bottom of 2022, from April until actually April to April, but the whole year, you had 3 Zwag Breast Thrust indicators in that vicinity, in that area, picking out the bottom. Didn't pick out the exact bottom, but to get 3 in a year is unusually a strong bullish sign. Normally you get 1 and that's good enough. Here we got 3, but anyhow, we got 1 triggered here. Started basically 1st of January, and the market's rallied up. Can be some consolidation sometimes, but in general, pretty much marks the low. Mm-hmm. So anyhow, this predicts the market will be a bullish situation this year because we triggered his Zwag Breast Thrust Indicator. That's my whole point. So things can change, but right now I'm still bullish for the year. Let's go to chart 2. This is starting to get real interesting. We talked on Tuesday. I bet this is one of these times where the market goes up and the trend goes up with it. And that's exactly what's happening here. A couple of weeks ago, the trend really wasn't even in bullish territory, even though we're higher than a couple of weeks ago. The trend is. The 3-day trend is at the bottom. It came in 1.26 as of yesterday's close. Next higher window is a 2-day trend. Again, anything above 1.2 is bullish. We're coming in 1.38. Then I had a 1 day here, above that, but I changed it to a 5-day. And the 5 days coming in 1.32. And the top window, which is basically the main one because it carries the longest time frame, and it's a 10-day trend. In other words, 2 weeks of trading, and it comes in 1.11, but it's steadily improving here, even though the market has rallied. This is all bullish. You want basically the market to go up on fear or panic. Fear might be a better word, but anyhow, if it's going up and the trend's staying pretty high, then that's usually implies that the trend will continue. I marked other times here. If you look in June of 2024, if you notice in that period, there was really no decline, and the trend went up as the market went up.
I see.
And that's probably what's going to happen here. The market's going to keep going up, and trend's going to keep going up. What's going on here? The public's selling into this rally. And that's usually a bullish sign. If the public's really buying into the rally, usually a trend gets really low to around 0.5, 0.6, sometimes even lower. And that's usually a bad sign. If the public gets really involved with the rally, normally those rallies don't last long, and you get trends like a 10-day trend down around 0.9 or something. A lot of times those comes at intermediate term highs. But here we got a kind of improving trend as the market's pushing higher. So I'm still long. It looks okay. Let's go to chart 3, kind of look at the short term here.
Yep.
Chart 3, that blue area I got shaded is all where that area trend readings are near 1.2 and higher. So you got a huge support area between basically 582 to 600. So if the market does go up and come back down, most likely this area is going to be support because you got panic in it. And once panic happens in an area, if you go back into it, that panic will, in other words, trend readings will rise again in that area. So I'm calling this area a big support area. So the decline, in my opinion, if 6 months down the road we pull back, this is probably the worst case scenario. We'll pull back too. I did also list the times when it in blue there, in blue print, when the trend closed at 1.2 or higher. I have a 1.17 in there. I thought that was close enough. But anyhow, if you notice over the last couple of weeks here, you got as many trend readings above 1.2. I think there's about 10 days, and of those 10 days, you got 6 days trend readings above 1.2. So that's a lot of panic forming, even though the market's gone up, and we're kind of, in my opinion, starting to break out to the upside here. So trend-wise, we do have the panic, which panic in general is energy for the market to move higher. And so even though the volume's pathetic here, you got fear in the market. And fears is what you got to have to push the market higher. So I know we're almost into a break here, but it looks good. So I'm staying long. We can cover the gold when we come back.
Definitely. And so, I mean, if you see like the trend shrinking then, or we can talk more about this when we get back, but I'll ask if the trend is shrinking, we're still going to the upside, does that give you pause that perhaps we might come back down?
Yeah, well, we can discuss that.
Perfect.
We'll discuss when you get back.
Perfect. Folks, stay right there. We'll be right back with Tim Ord right after this break. Welcome back, everybody. This is Jacob Shoup. You're watching The Tom O'Brien Show. I'm joined right now by Tim Ord of the Ord Oracle. You can go to TFNN.com, go to the services tab. We have two fantastic webinars from Tim Ord. That is six secret ratios every trader should know, and then the science of market tops. I really recommend the market tops one, especially as we're kind of getting into very topping pattern, if you will. Additionally, you can go to ord-oracle.com, that is the ordoracle.com, and check out his website. Tim, before we went to the break, we were taking a look at chart 3 with the SPY. Some nice, movement to the upside still, and you're having, I think you said 6 out of 10 sessions where the trend is closing at or right near or above the 1.2 level, and that's kind of suggesting to you that this movement to the upside can have some energy still.
Right, yeah, we're still like a trend right now is 1.18. Market's almost up a little bit, but unchanged. But you talked about right before the break.
Yes. If
you go back to chart 2, and on the top window there's the 10-day trend. Mm-hmm. And the 10-day trend, when you get down around 0.9, you're going to have to visualize it there, but if you draw a line across 0.9 on that chart, and you'll notice all those times you got down below 0.9, if you draw a trend line down to where it appeared on the SPYs, it was a top.
I see.
So that's the reason why it's dangerous. Matter of fact, we had one back in late December. We got the trend down to, I think it was actually 0.9, and you kind of pulled back over the next couple of weeks. So now we're heading back up. But you get 10-day trend down around 0.9 or lower is usually not a good sign. Yeah. So I just wanted to put that out there. You're talking about trend closes that are low. If it's consistently low over a period of time, a lot of times that's too much optimism for the
no, that's
market.
Actually fascinating. I'm seeing this right now. Folks, if you want this chart, just email me, Jacob at TFNN. But yeah, I see exactly what you're talking about, right at 0.9. And you're hitting top patterns.
Around 0.9 or lower.
Yeah.
The lower it goes, the more bigger that top is. So if you get down to like 0.8, that would suggest a larger top than 0.9 on the 10-day trend.
Okay.
So, something to watch. I keep, in bottoms, the opposite way is 0.2 or higher, preferably higher, because the higher that above 1.2, the stronger the next rally. So,
okay.
So anyhow, that's how that works. So let's go to chart look at the? You want to look at the gold market here?
I think we should, yeah, because we had that recent top of 2906, pulling back a little bit right now. So curious to get your insights on this.
2906.
At least in the gold contract, yeah.
Oh, okay.
I know we're looking at GDX right now.
I'm kind of looking at the gold issues. The reason why I think it's going to actually outperform gold. And so far, it hasn't. But I show you a couple of charts that I think it may over the next maybe 12 months. But chart 4, we've been looking at the monthly cumulative advanced decline and monthly cumulative up-down volume on Tuesday. Well, this one is weekly cumulative advanced decline and cumulative advanced, that's the bottom two windows.
Okay.
And anyhow, as long as they're above the mid-Bollinger Band, the market's in an uptrend, and they are. So the weekly charts are up. Actually, the monthly charts are up also. So it's kind of a reconfirmation of what the market's actually doing here. And these signals, I marked the years in the past, how long those signals last. And the last one came in January 2021. It was a sell signal, pretty much stayed on a sell signal until March of 2022. So that's close to a 3-year period. And so, can the market go up for 3 years? Momentum will tell the story. Once the advanced decline and up-down volume kind of runs its gamut, I guess you might say, and start to turn down, that'll be where the next top will occur. And where will that be? I'm not sure. We'll have to wait and see. But right now, the trend's up according to the weekly charts, actually according to the monthly chart. If you flip to chart 5, so it's just real kind of early to talk about where's the next exit game in the gold market.
Yeah.
Because gold market's cyclical. It goes up, it comes right back down. And so the top window is actually the HUY, just because it goes back further than GDX and XAU. So I picked the HUY index. But I marked the times. Anyhow, the bottom window is the weekly gold contract. Next window up is the weekly HUY gold ratio. And the top window is weekly HUY. And for the middle window there, above the weekly HUY gold ratio, I have the RSI. And so this is a weekly time frame, not a daily time frame or a monthly time frame. But when things get kind of exuberant, this ratio will really rise. And when that ratio rises compared to the price of gold stocks are really doing well. And for some reason, when gold stocks doing really well, if it does really well for too long, it's going to go into a high. And all those red lines across the chart are times when the RSI got, of the HUY gold ratio, RSI got above 70. So that means there's a big surge in the gold stocks at that time. So you want to sell on strength. And this chart helps you do that. If you look in 2001 rally up to that 2000, looks like about 7 high, the ratio. You go up and you consolidate. You went up and you consolidated, and finally you did kind of peak out. It didn't really pick the top. But over the last several years, going back to 2016, it picked out quite a few of the tops. And what I'm saying right now, when this ratio gets up around 70, RSI of the ratio gets up around 70, you're going to probably at least have a time out in the uptrend.
Okay.
And it's one of the reasons why I'm kind of watching it now. So far, this HUY gold ratio, in other words, gold stocks are doing okay, but they're not doing great, which tells me that we're probably going to continue with the rally. It's going to continue until it gets too good to be true. And this chart will help define when that time happens, because that's when the RSI will rise to 70. And that'll be the time to at least take some profit in the market and maybe step aside. It could be just a sideways consolidation, or it could be a multi-month top. I don't know which one, but this is one of the indicators I'll be following. So right now, the RSI is coming around 50. So that's a safe place to even invest in here. That it's just has turned up, but it's not at any danger level. It's just a top of any consequence. So gold in general is still a good buy in this vicinity, even though GDX is pretty much up 50%. over the last several months, it's got a long ways to go yet. So we're still early.
Perfect.
We're running out of time, I know. So
well, we have 2 charts left if you want to stay. Perfect. Folks, we'll be right back with Tim Ord right after this break.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. Tim, before we went to the break, we're looking at gold. Take a look at the weekly RSI for the HUI gold ratio. I liked what you were saying with the RSI. It's something to definitely keep track of. Now, we do have a silver and gold chart as well, which I'm very much looking forward to getting into. And then, of course, chart 7 as well.
All right. Let's flip to chart 6.
Yeah.
And this is kind of a value chart. It's a silver gold ratio. So it's momentum is important, but the areas where this ratio stands, I guess, is important. Mm-hmm. So you can use the RSI on this too. It works just fine. You know, if it goes up too fast. This one picked out the top back in 2011 because the RSI of this silver gold ratio, this is a monthly chart, matter of fact. So it's a monthly silver gold ratio, and the top window is the monthly XAU. So I put the XAU instead of GDX, goes back further. But anyhow, you can use this chart. You can put an RSI with it to pick out the bottoms and the tops. Again, this chart picked out the 2011 top in the XAU. But anyhow, if you go back, this chart goes back to 1982, and usually there's value. So it has a relationship between silver and gold. And so when this ratio is low, that means silver is cheap compared to gold. When the ratio is high, then silver is expensive to gold. Mm-hmm. So right now, because I think this is still in the early stages of a rally here, but if it gets below 0.125, we're coming in at 0.0125. We're coming in at 0.011, and it's just staying low. It's not coming off of the market. And I shaded in pink other times when this ratio, either with lines or with shaded areas, where the ratio came in. It's not designed to pick the bottom. It's just designed to pick on the chart where the cheap, when that ratio is cheap compared to what the XAU is doing.
Right.
And so basically since 2016, this ratio has been relatively cheap, especially in the big COVID crash of 2020. You know, that's the lowest it's ever been. That was a great buy in the gold stocks, but we're still actually a good buy here. And what I'm saying value-wise, at some point, this ratio is going to rise back up to the blue area, which I got defined between 0.018 to look like about 0.021 in that vicinity. But yeah, if it gets up in that blue area, the horizontal blue bar I got going across the monthly silver gold ratio, is times when this ratio is expensive, and in turn the gold stocks may be expensive. So that's what I'm kind of looking for. Before this rally is over, I'm thinking this ratio is going to get back up into that 0.02 range. And that'd be another warning that the rally, which we're a long ways from ending, where we are right now, is the time to pull back the bullish horns. So
I see.
I'm thinking this rally is probably going to last a while because this ratio is so cheap. If it was around above, say 0.016 or something like that, I'm thinking we're getting late in the rally. But now we're still in the pink area, so it looks bullish. Anyhow, it's we got quite a road in front of us, and I think it's going to be up. This was one of the reasons why I think this rally has a lot further to go. So we can flip to chart 6.
Perfect.
So this all goes back to short term. This is pretty good, picking out the short term swings. I probably should have took more of the chart, but this chart goes back about a year and shows the times. The bottom one is the 18-day average of the up down volume. Next window higher is the 18-day average of the advanced decline, and so it shows the internals weakness and strength and compared to the advanced decline and up-down volume on those advanced declines. As long as those two moving averages are above -10, the uptrend should continue. And it picks out the highs and lows fairly close. But what I use it really for is kind of seeing where the market is heading. As long as those two moving averages stay above -10, the uptrend should continue. If you look back in September, October, and November of last year, if you notice, both those advanced decline and up-down volume were making higher lows, which I got lines on them, red lines to show that.
Yes.
If you notice, GDX was making higher highs. So that was a divergence. So the market was telling you it was running out of steam going into that, looks like October high, because every rally was weaker than the previous rally, even though the market made higher highs. The up-down volume advanced decline indicator was making lower highs, warning that you're probably heading into some sort of consolidation. But right now we don't have that. We're breaking above the previous high of December, and both those moving averages also broke above the highs of December. So it looks good. So how long can this last? It's hard to say. There's some other indicators that I come across that suggest we probably could rally all the way into July. Sometimes July, seasonality wise for the gold issues is either can be a high or a low, and I'm thinking we're rallying into that time frame. It could be a high. So we'll see how that works out. But right now, short term, this rally is still in the early stages, and nobody's believing it yet.
Right.
And which is good, because if they did, all these statistics would change. So
definitely.
And so far, that hasn't happened yet. So you really got to buy in fear, and you really got to sell in optimism. And this chart kind of helps you do that. So we're still fine. How high is high? Don't know. But I'm thinking there's other indicators that, at minimum, the current rally should last into November of this year. Actually, that'd be the worst case scenario, and the best case scenario is rallying into 2027. So I don't know which one it's going to be, but as we go forward here, and as these indicators change, we'll be reading them and telling you probably what the next step will be. I didn't take myself out of this rally that we had a high in October. I did see that divergence.
Yeah.
But if you look at, we're into a time where leadership will change. Sometimes the generals will lead and the soldiers will falter, and sometimes the soldiers will falter where the generals will decline.
Sure.
And we're into that rotation period now. So some stocks will perform, and usually most of these declines, Fibonacci-wise, will probably do minor pullbacks. So sometimes if you get too trade happy, you'll take yourself out of a good trade. So I kept that long position, and so far that's been, for me anyhow, the right decision, because I didn't see a top of any major consequence. It was just an ABC down, and now we got another impulse wave up going. So
fantastic.
Looks good.
Well, I know as Tigers will definitely be watching gold and the miners as well. Tim, thank you so much for joining us. We'll see you Tuesday.
All right. Thank you for having me on.
Absolutely.